Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, February 18th, 2016. Well, folks, yesterday I unloaded my Amazon and Google and many other big plays that I had been holding, including Tesla and some other plays. I want to show you how intelligent that was, and I want you guys to understand so you can replicate it in the future. So obviously Amazon had a big bounce. We bought in right down here. Amazon bounced. Notice where it was going to. It was going into the 200 moving average on the daily chart here, and the 20 moving average is sloping down. So someone would say to me, well, don't you think it's going to go higher eventually? Well, yeah, eventually you do. But as an intelligent trader or investor, you need to understand when risk reward turns against you, at what price point, right? So as we kissed the 200 yesterday, the odds of a pullback, at least in the very short term over the next couple days, increased dramatically, more so than the upside reward. So what I ended up doing was I took my money off yesterday, and we saw today, and we are seeing today, a little bit of a pullback here off of those moving averages. When you have these two moving averages right here, and you're bouncing up into them, it's almost impossible for a stock to blow through them without at least a small pullback. So the intelligent thing, again, is to just take your money, wait for it to pull back a little bit, and then at least you're getting it at a discount to where you sold it. So think about it. Imagine yesterday we sold it at, what, 535, somewhere in that vicinity, right? Now it's at 532. Imagine if it can pull back to 525. So it's just a $10 pullback, and we buy it again there. By doing that, you see what we're doing? We just netted that extra $10 on the trade. And again, you're putting the odds in your favor by doing this, because you know two moving averages like this, when you bounce this quickly into them, you're going to get a pullback. All right, so again, it's very intelligent trading here. This was done somewhat on Google yesterday as well. Google, again, notice this, guys. So pivot low, and you made a lower low. So the bounce into the 20 tells you you're most likely going to have a small pullback. Do I think it could go a little bit higher? Yeah, ultimately after it pulls back, I think it goes and touches this 50 MA right here. But I can always buy it on a pullback again and look for that next move. In addition, notice you have a lower low here. What this tells me is that even if you go to this 50, the next bigger move is going to be to the downside, at least to that 200 moving average. All right, notice this little pivot low right here, right there as well. So I think, again, you're getting a little pullback here. You'll get one more push up into the 50, and then the bigger move down into this range. And that kind of fits the S&P 500 too. If you look at the SPY, the tracking ETF, you haven't fully maxed out with a moving average hit or potentially a hit of 200 here. But you've obviously had a 3-bar surge, so today should be a small pullback day. I think you pull back over the next few days probably into this 189.80 level right here. A little bit of a gap fill, 20 MA right there. And then once you do that, I think you have one more nice move up in the markets that'll take you at least to the 50 MA, potentially higher. Okay, so it's all about, again, whenever you're in a trade, don't get over-emotional. Too many investors get very emotional. They get too bullish, too bearish, too greedy, too fearful. And it makes them do bad things, right? It makes them make mistakes in terms of buying or selling or shorting and so forth. You have to look at the charts. The charts tell you everything, and that's what we do here at InTheMoneyStocks.com. We teach you how to read the charts. And it's a beautiful thing, folks, because the money just piles up over and over and over again. I want to show you the track record here, third-party verified. Here's our website, InTheMoneyStocks.com, and all you got to do is just come right over here, folks, and I want you just to go right in here, Research Center track record, click on that, and here's the track record for this year, 2016 so far. 162, almost 63% net gain. Only one losing trade this year thus far that's been closed out. And again, absolutely stunning. I mean, we're not trading small caps here to generate these gains either. Look at what we're trading. BIB, which is a biotech NASDAQ double ETF. QLD, Google, Netflix, Tesla, Amazon, Lumber Liquidators, KMI, Kinder Morgan, Micron. I mean, just going down the list. And I mean, look at KMI, we netted almost 21% just a day or so ago. We sold this yesterday on 217, which was yesterday. Look at this, $3 on that stock in a matter of basically 2 weeks. 2 weeks from the 2nd of February to the 17th. That's by reading the charts. And folks, I can't stress this enough. What you really should all be doing is going here to the online courses. You got to go pick up some of these online courses. All right, these are proprietary in nature. Methodology revealed in the elite keys are the two most important, where we teach you proprietary signals. That's where you're going to be able to learn how to read the charts like true pros, true Goldman Sachs top elite players. We literally outtrade these guys. I mean, look at our returns. Our third-party verified track records, and you tell me that there's any hedge fund out there that outperforms it. There isn't any. All right, so bottom line is, guys, go to the online courses, pick up some of these online courses. It will blow your mind.